crypto is weird, right? It's like a weird market. There's weird people. There's a lot that's weird. But one of the weirdest things is actually that like there are a bizarre network of like skewed incentives, and it's very hard to tell what is true and what is not. I think like we're just starting to see examples of like composability across these consumer products really work, and it's really exciting. I think that all of this stuff will get more open and less fragmented in the immediate term, but then I actually think it will go back to getting more fragmented.
Hi everyone, and welcome back to another exciting episode of NEWFORUM. And we're always happy to bring you awesome creators, founders, and investors on our Web3 podcast. And on today's episode, I'm honored to have Regan Bozman with me, who's the co-founder of Lattice Fund. And yeah, today we're going to discuss Web3 investments, graph technology, and focus a lot on Lattice Fund. Hi, Regan, happy to have you on today.
Yeah, thank you for having me.
So I want to know, like, what is your backstory and how did you got into investing in this incredible space?
Yeah, absolutely. It's definitely a bit of a winding path. The journey kind of starts about 7 years ago. I moved out to San Francisco. I was working on the deal team at AngelList. So sort of, they built this marketplace for facilitating capital going into like early stage startups, more or less. And about a year and a half after I joined, we decided to spin out this business called CoinList, which was basically building a similar business around capital formation in crypto. And so I decided to jump over and was the first employee to do that. I knew absolutely nothing about crypto at the time. Like I remember someone mentioning like an ERC20 token to me, and I was like, I didn't know what that was. But AngelList's core business and venture, it kind of like helped grease a wheel that was like already spinning. Like venture worked a certain way. I think it'll work that way in 10 years. It's worked like that for a long time. And AngelList has done a great job of kind of democratizing access to that, but it felt like there was a much more like blue ocean opportunity in crypto to do really new things. And I think that thesis has like played out at least, right? You have all of these crazy Dutch auctions and like all of these different ways to like get tokens live, and just like the landscape of capital formation there was definitely more interesting. And yeah, so then I this was like September, October 2017, started at CoinList. This is kind of like as like the last bull market was really like heating up, and was really a crazy 3.5 years. Like the first, call it 9, 12 months I was there, utter insanity. And then like everything collapsed. And we had like a terrible business for about at least a year. And the market started picking back up again, I guess like fall 2019. And then I stayed for about another year and a half, but really wanted to go kind of do more crypto native work, which is how I ended up leaving. And then there's still actually a few more like turns on this path before we get to Lattice.
That's pretty like exciting. I'm wondering, how do you see the current landscape? Like what are the current deal flows and things that you're looking at? And I mean, you mentioned we had this quite hype cycle and this really boom, and now we're a bit like in a lower period. But I'm wondering, like from the long-term perspective, like what projects are you most excited about, and like what are you looking at currently?
So I guess to take a step back, I think like, obviously we've come down a lot from the peak of this hype cycle, but I think I have a lot of frustrations with where the industry is, which I'm happy to talk about them. But I think fundamentally, like there is a lot to be excited about. I think you look at DeFi and like there's a lot of money that flows through it and it works. And that is true in a much more significant way than it was in the last bear market. NFTs are obviously an order of magnitude larger than they were in the last bear market. And I think like DAOs are more real. Like there's just everything is like less dumb. Like things were pretty dumb last cycle. I think things are generally less dumb. But I think like really where the opportunity, and because there's an opportunity where the current gap is just like building products that are useful for like some large segment of people. I think that's really like where the industry needs to go. And so, one of the areas like I've been spending time on, and I think that's how we started messaging, was just around like Web3 consumer. And I think kind of on-chain credentials is a part of like what could cause that category to break out. But just looking, I think we have products like POAP where, there's like a million people have claimed these things and they're not financialized and they're kind of fun, right? Someone coined this term that like every consumer app fulfills like one of the seven sins. And Tinder is lust, I guess, whatever, like all these food delivery things are gluttony. And I think POAP and kind of a lot of these like location-based products before like Foursquare, it's like pride, right? You're like at a cool event and like you want to like share that. And so yeah, I think they're like you have consumer apps that are like starting to kind of meet some fundamental need, which is generally like why people use products. So I think that's gotten me really excited. Another area like Lattice as a fund has been spending a lot of time in is kind of these token incentivized physical networks. So basically things like Helium, where you're using some kind of crypto incentive to bootstrap growth of a marketplace or a network. Generally, that's like on the supply side. And so we invested about 9 months ago in a company called React that's doing this in like energy markets. That's another area we've been excited about. But we, as a fund, are not constrained by category. Like we're happy to invest kind of in anything in early stage crypto.
You mentioned POAP, and I also saw that there's a couple of like I would say identity or graph related projects that you guys are interested or investing in. For example, CyberConnect, Galx, Layer 3. And I'm wondering, what do you think about the decentralized graph as a idea evolving? Like, do you think we're going to, I mean, obviously we have right now a lot of blockchains are like fragmented and a lot of networks. And I think like, where do you think are we going to move with that?
So yeah, I like talking about this because I didn't really have a big thesis on this, and then I kind of looked back, and we'd actually invested in a lot of companies around this area, and it really wasn't intentional at the time. I think we just generally got excited about these vision. I think to me, if you just imagine a world where you took all of our social activity, your work history that you share publicly, so that's something like LinkedIn, your writing, your tweets, whatever, any way you want to like express yourself publicly on the internet, and you just like settled it on the same database, the same social graph. It's really powerful, right? It's actually quite a powerful vision, and I think we're actually, composability, right? It's like a classic kind of thing you say about blockchains, and it generally sounds pretty academic, but I think now you actually are starting to have products. Like there's this crypto talent marketplace called Mazare that they leverage basically all these permissionless building blocks. So they've kind of spun up this pretty cool marketplace focused on engineers, where all they do is like reference these like open source credentials. So like POAPs from developer meetups, things like what you've written on Mirror, a lot of like the hackathon prizes or NFTs, right? And so you can actually just like reference the Ethereum blockchain and build some decent profile of a person. Is that as useful today as like looking at someone's GitHub? Like no, but like I think it will be. And so that's really exciting. You mentioned fragmentation. Like I think that all of this stuff will get more open and less fragmented in the immediate term, but then I actually think it will go back to getting more fragmented. And what I mean by that is, I think today, the way that most of these credentials are implemented is just NFTs essentially, and they're generally non-transferable. And so it's very easy to just like reference all of this on-chain data. I think that that's probably not the form it takes long term. Like I think if you said to most people, whatever, this thing you did, we're going to like issue you something that's like permanently on chain and you can like never take back and it's not encrypted. Like that's just not how most people want to live their lives. So like I think like 1 to 3 years out, this kind of hybrid architecture where maybe these credentials are stored off chain, but like they're referenced by a wallet, you can like basically sign and verify them with a wallet, selectively reveal them so that like the attributes of those credentials can be used on chain. I think that's kind of probably where we net out, but like everything in crypto, it probably takes a long time to get there, and is probably fragmented in the immediate term.
Yeah, and I think there's not only that fragmentation of like between chains, but also like we still have the Web2 kind of landscape and people, like everyday kind of people who are not like there yet. And it's like you mentioned something as well where I'm thinking, do I want to have everything there? Like I change and my identity changes, and so how do we keep that like kind of like flexible, I guess? Or but I think it's really interesting. And we also had a guest on who mentioned that he curated for a lot of artists, musicians, but he never got any he can't show anything. He can just say, oh, I work with these people. But if there would be a way to like actually have some sort of ownership of that would be, I think, pretty great. What do you see, like, from your perspective, are like our challenges? I mean, I work with these people every day, and you probably as well. So like, what do you think, like, where's the challenge with adaption and all these things, like right now, like from your perspective, and like what projects maybe are doing a great job at that right now?
It's a good question. I think to me, it really the biggest gap and the biggest opportunity is just like making these products useful for people. And that sounds really dumb and simple, but like I think if you held most products up to the test of like, hey, are you solving like a real problem for like a large addressable market today? Like the answer is no. And so I think you have here kind of this reversion to like infrastructure. So it's like, all right, let's build like all of this like DID infrastructure. Let's build like ways to store these assets. Let's build ways to like whatever. Zero knowledge is cool. Let's use some of that here. And I think a lot of this is well intentioned and like the infrastructure is useful. But I think it's always easier to just like say, all right, we're going to build the infrastructure, and then someone else is going to figure out kind of how to make these products useful. And so you have a lot of that in crypto generally, but especially in this kind of like social and credential space. So I think here, just creating natural demand for these things, that's really like the biggest opportunity. And so I think where we've seen projects do well is ones that have kind of found just like a specific wedge in the market and executed really well against that. So, I think an example of that is like Galaxy, which is an investment in our first fund. They have this vision of building kind of this like on-chain identity layer, but that's like a very large vision and it's hard to get there. And it's not obvious that exactly what you would do with it today. And so their go-to-market has kind of really just been as this marketing infrastructure tool. So they power a lot of these learn-to-earn campaigns. Like, for example, they're working with Optimism right now. And they just found a gap in the market. There are not really good ways for crypto projects to get new users, to market to their users, to retain and engage their existing user base. And so they're solving this gap in the market right now. And I think it directionally gets them it gets them towards what they want to build. But they kind of found a market niche and they're serving it now. So I think that's really the biggest gap and just like the biggest opportunity set right now.
I see this a lot as well, where you have like a project and they're kind of like working in a silo, but then if they would team up with somebody else, they would join forces, like have a better delivery, I would say, and also better feedback loop maybe. Yeah, I'm wondering, like, what are some key takeaways from you, like for founders and startups right now, like that are like in the seed round or whatever, like that are trying to survive this this downturn, I would say.
Yeah, well, I don't run out of money. It's probably the most obvious one. I think for us, like crypto is weird, right? It's like a weird market. There's weird people. There's a lot that's weird. But one of the weirdest things is actually that like there are a bizarre network of like skewed incentives, and it's very hard to tell what is true and what is not. So even like the simplest example, right? Like you just go on Dune. It's like, all right, like who's making the most money in DeFi, right? And you list a bunch of protocols. It's like whatever, Aave, all these teams are profitable. Well, like you're not looking at token emissions, right? So then you kind of dig a bit deeper, and it's like, oh, actually, none of these protocols are profitable, right? They've essentially all been giving money away for years. And that's just like a very basic example. There are a lot of like skewed incentives in crypto, whether it's like investors trying to attract teams to their favorite L1. It's just very hard to tell where there's like genuine market demand. And so I think where we've seen teams struggle, and then on the flip side, I think some teams do this really well, is just like really truly trying to understand a market segment. Don't like build something assuming people will come or they will use it, because oftentimes they won't, but really like deeply understanding these three people all have like this shared problem and they're willing to pay for it. And like, I know that this is like really a pressing need for them. And then just going from there, I think that's really like, there's not enough product development from that angle in crypto. And I think that's where teams who ignore this, we've seen a lot of them struggle.
I like that. And also, how do you, like, for example, something I always ask myself, right? There's like different tiers of crypto people involved in, I would say, like the ecosystem of crypto, and then there's people outside of crypto. So how do you take care of like communities, right? Like it's so hard sometimes to talk to people. Somebody might understand something on this level and then the other person understands it on here, or like I think that is really hard to sometimes, because there's so much different knowledge bases and like interests as well, right? Some people are into gaming, some people are just here for the NFTs. So it's like, I think that's a big fragmentation I also see. I'm wondering, like, what do you think like is like a good community sign for you? Like, what does it like, how does that look like for you?
I guess there's two ways I can answer that. I think teams that have found a way to like effectively leverage their community and get the community involved and contributing to the protocol, like that's probably the highest signal. I would also say that like we generally invest quite early before there is like a token or really a network live. And so there's oftentimes like not a massive community to kind of to use as an indicator. So I think it's like something we look at a little bit less. I would say I don't think this directly answers your question, but like a lot of times, like when we're looking at companies that are serving other companies in crypto, like their community or who we're really trying to understand as their customers. And signals we really like is that they have like a really small number of initial customers. Often I'll call them design partners, and they're just like really deeply understanding what those teams need, and they're building for that. Versus kind of this like grandiose vision of like, oh, we're going to serve everyone in crypto, and it's going to be this massive thing. So that's like often what we look for. I would say maybe like in place of like something like a community, because these are often like not consumer products.
That's really interesting. So kind of like narrowing down the focus and like having a strong kind of like inner feedback loop with people is more important actually in the early stages, right? Thank you so much, Regan. I think this was so insightful for our community and for everyone who is, going through this phase with us. And where can we like find you on Twitter? And yeah, we'd love to know that.
Yeah, absolutely. It's just my first name, last name, REGAN BOZMAN. Yeah, like DM me or reach out if you're building anything in this space or just want to talk about like nerd out on credentials and some of these consumer products.
Oh yeah, and one thing I wanted to ask you quickly to finish up, like what are the thing that you're most excited about?
Well, in my personal life, I'm getting married in November, so that's like definitely the most exciting thing. But
Congrats.
the audience probably cares more about, thank you, cares more about the crypto stuff. I think like we're just starting to see examples of like composability across these consumer products really work, and it's really exciting. So this is like a very simple example, but like I was using Paragraph last week, which is kind of basically like a crypto native email distribution list. And you logged on and they basically like suggested you follow newsletters based on like your forecast or social graph. And this is like super simple, right? Like it sounds basic, but what's cool is that like they did that totally permissionlessly, and they could actually ingest those same signals from like any other crypto native social graph that like was useful. So they could integrate CyberConnect, they could integrate Lens, and like what gets me excited is I think like because all of this stuff sells down to Ethereum or other blockchains, like one product getting more useful, getting a bigger audience, kind of helps everyone else. So I think for me, like as one or two or three of these products get better and they interact with each other, like it just creates a richer consumer experience. And so I think like these more composable social products, like I'm very excited for.
Yeah, same. Thank you so much, Regan. And thank you for everyone who tuned in. Make sure to follow us on our Twitter and also subscribe to our YouTube. And we see you guys in the next episode of NEWFORUM.